Good morning, everybody. It's the 7th of February. We are Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
Have a nice weekend?
Yeah, lovely. Yeah, good
Good,
weekend.
good. Okay, cool. Let's get stuck into it at the start of a new week. First up with the headlines. So obviously we had the non-farm payrolls out on Friday, and they came in significantly better than what was expected, making the old boys at Goldman Sachs look a bit silly, wasn't it? They were talking about a minus 250,000 figure we were talking about on Friday, but they came in with an increase of 467,000. So,
Yeah,
quite a significant difference there.
yeah.
710,000 odd difference.
Very big difference. Yeah,
Cynical
don't know.
Steve was all over that at the time,
I
wasn't
was at the
he?
time, wasn't I?
They were throwing a dummy there, weren't they? And
Yeah.
didn't fool Steve. He knew exactly what was happening.
Yeah, it's amazing, but yeah, it's a bit of a coin flip. I mean, it just shows you that sort of like the number, US non-farm payroll is one of the biggest numbers that we look for each month. But really, if you think about it, does it make any real big difference? It does on the day. It has a lot of volatility, but I think sort of like the normal market conditions would kick in this week, and things will continue as normal. Yeah.
Okay. Well, in terms of what's going on in the geopolitical situation, the US Army reinforcements deployed in Poland and Germany. President Joe Biden and his French counterpart Emmanuel Macron talked on the phone about responding to Russia's military build-up on the Ukraine border. That's according to the White House. Macron is due to visit Moscow and Kiev this week. Ukraine's defense minister said the probability of an escalation by Russia looks low, while an official close aide of the president in Ukraine said the West should specify potential sanctions. So they're obviously asking, for some help there. Boris is reeling from 5 aides resigning in 24 hours last week. He's also moved pretty quick to fill those positions, inserting Cabinet Officer Minister Steve Barclay as his Chief of Staff. Obviously still under growing pressure there and an internal rebellion. ECB said they expect to increase interest rates as early as the fourth quarter. Borrowing costs are typically tightened in 25 basis point increments, and they don't have reason to think differently this time, according to one of the council members. Australia looks like it's back open for business from February the 21st. Ending around 2 years of strict international border controls introduced to stem the spread of COVID-19, which is obviously a good sign. And I think, pretty much there, aren't we, at the end of the pandemic? What do you reckon, Steve?
Yeah, I don't know. The jury's still out. I mean, the pandemic's now turned into like just there's a lot of internal politics, that look like they're in a real mess with, people still saying, oh, you can't come into our country unless you're vaccinated or double vaxxed or whatever. I think there's still a lot of leftover hangover from it that we'll see.
Yeah.
But it feels like the actual disease itself is now under control.
Yeah.
And yeah, it's the fallout from the vaccines. I think that's going to have the impact on whether countries, like people like sort of that rely on tourism, if they're going to, have these restrictions. I think there's a case in Disneyland. You basically, unless your children are double vaccinated, you're not allowed in any of the restaurants. So people are going on holiday to Disneyland, not really knowing this, and they're sort of like not being allowed to sort of spend their cash in the restaurant. So
That'll change, won't it? As time goes on, that'll soften.
I think so. I'd like to think so. But yeah, we'll wait and see. Yeah, it's still a long way to go for us to get back to normality. And obviously with interest rates rising and set to rise throughout the year, and with oil prices and the energy sector sort of like hitting hard on sort of home bills, it's going to be a really, really tough few years, it feels like. So a bit doom and gloom, really. Yeah, got rid of COVID, but look at the mess we're left with, and how do we sort of like put ourselves in a position to sort of like get through this? Don't know.
Hopefully, you're going to show us on some charts in a minute where we should be putting our money.
Yeah, maybe. This isn't investment advice, by the way.
Okay, just to get that in there.
Yeah.
Big disclaimer across the screen.
Yeah.
Okay, so let's get stuck into some charts then. So the Asian markets are back after a period off due to the Lunar New Year. So that could increase a bit of market participation. It is a bit of a quieter day on the calendar today, but yeah, let's have a look at some markets, shall we? Steve, anywhere you want to particularly start this morning?
I'll start with commodities, if that's okay. Oil continues to grind higher. Still sort of like this $100 barrel of oil looks quite fancied, really. We've got now 7 positive weeks on the WTI crude oil, which isn't bad. We've just hit the 78.6% Fibonacci retracement of the move from the 2nd of September 2013 to the lows of 2020. And yeah, looks pretty much like this is going to continue. No real reason for it to pull back. I think Saudis are have continued to raise sort of like prices to oil exports to Asia. There's a lot of things going on. If we look at the equity trading, look at this. So I was just looking at oil, and although the new sentiment remains negative, it's actually improving over the last 24 hours. So that's positive for that. The last market alert we've seen came out yesterday saying there's a 90% confidence rating in the market moving higher in the next 7 days. So that looks positive for oil. Breaking down to the shorter time frames, or if we look at the daily chart, the impulsive move higher continues. On the 4-hour chart, we had this channel where we saw the price action break out to the upside, and I expect to see good support around about the $88 on crude oil, on WTI crude oil, and around about 89.65 or on Brent crude oil. So really looking to buy dips in oil rather than just getting involved here. Feels like we've had a little bit of a short-term stall, maybe a correction lower before buyers come back in. Looking at crude oil, looking at gold, weekly chart continues to show this like short-term trend moving higher, but within a longer-term downtrend. So still feel there's potential for this bullish channel to play out over the coming months and years. But at the moment, it feels like we are a little bit capped, although sentiment has improved. And again, if we look at the news sentiment over the last 24 hours, has been a positive flip to the upside, a little bit of a move higher over the 7-day moving average, but also still remains in negative territory. So last trade idea yesterday, 70% confidence of the market moving higher in the next 7 days. So again, new sentiment positive, and looks slightly constructive on the short-term charts as well. This is 4-hour chart. We've seen this nice sort of like channel higher, potential obviously for a bearish flag, but it's pushing up towards resistance around $1,817. Above that, we've got 1835 and the 1855 resistance levels to look out for. But yeah, slight on the positive note in the commodity sector at the start of the week. Indices, let's take a look at how they finished. Finished with a bit of a rally towards the close on Friday, completely counteracting the sell-off on the Thursday night before the non-farm, and FTSE is pushing towards this resistance around about the 76.60 all the way up to this is a weekly chart, so 76.35, and above that we've got resistance at 76.85 and 77.35. So this continuation higher in FTSE doesn't show any real signs of slowing. Let's take a look at the 4-hour chart. We've seen a little bit of a pullback over the last couple of days, but support should sort of like be formed around about the 7,500 level. On the DAX, slightly negative on the DAX overall. We finished last week, well, it ended up being the third negative week, although the week before was a bit of a bullish hammer, so that was a bit confusing. We still have this really constructive support level down at 14,810. A couple of hundred, well, 300 points, 360 points below us at the moment. But yeah, last week's candle was negative also. So maybe not so rosy on the European front. The Dow finished positive for the second week in a row, and although we did sell off from the highs at 35,600, 35,700 in fact, we pulled back from there over the last couple of days. Looks a bit toppy. There's that bearish engulfing from Thursday. Friday was a continuation lower, although we did get that rally into the close that we were speaking about. So Nasdaq, this is the one I've been trying to fade over the last week or so, and again it had that rally towards a close. Let's have a look at maybe the hourly chart. This is shows my gun to head trade. Felt like I was a little bit greedy. Really should have focused on that 61.8% fib retracement. Almost nailed it there. I was getting greedy, looking for a bit of an extension of the move lower, and then we had that squeeze into the close, and we're just trading below really the resistance of this right shoulder. So still a bit of potential on the downside, but I'm not so confident. If you really sort of like, you can really sort of pick out an inverse head and shoulders here. So really be wary of a break above the resistance between 14,800 and 14,900. Really, that a break above there should extend higher. However, what may be worth selling into the rallies there to maintain this cautious approach to the indices. S&Ps on the weekly chart, again, similar to the Dow, pretty positive, although it did sell off from the highs. Looking at the, let's take a look at the indices. We can see that there's been positive sentiment. We can see it's moved aggressively more positive over the last 24 hours. Still negative overall sentiment, 0.109 down. On the tech, similar. It's moving higher. It's moved aggressively higher since Friday, and the averages turned up. And I think we can see on the S&Ps as well, it was the same. Can't see the S&Ps. There you go. Yeah, see the move higher in news sentiment. So positive news sentiment. Technicals a little bit sort of middle. I think neutral really at the moment on that front. Cryptos, Bitcoin had a really decent rally over the weekend. It looks like we're going to get this retest of the neckline. We've got this head and shoulders formation that I've been talking about, really looking at 44,000 to 45,500 as resistance. I'll remain negative whilst we're below here, but yeah, really nice turnaround from this almost test of the main support down at 28.8 to 32.5. We were looking maybe at a potential for a bearish flag, but it's broken up to the upside, and you can see here we're going to get this band of resistance coming in the form of the Ichimoku cloud as well, just slightly higher. So 44,500 upwards should cap the rally. Ethereum has been nicely aggressive as well to the upside, and that should have resistance between the 3,000 and 3,400 area, looking really maybe to fade into that over the more short medium term. I think I've covered everything, Joe, have I?
Yeah, done a good job there. Thank you, Steve. Okay, let's have a quick look at currencies then. Off the back of the non-farm payrolls on Friday. Let me just get my chart sorted. There we go. So first up with the dollar index, still trading in this bullish channel. On Friday, price action was quite mixed really. Finished up positive on the session, but sort of moved lower towards the lower end of this bullish channel, and then seemed to find some interest from the buyers. A little bit of green on the charts today. Overall, still pretty bullish and expecting higher prices there on the US dollar. So looking elsewhere, Euro has had a really good move to the upside following the comments from the ECB last week, and that stalled a little bit last week into this resistance level at 114.82, which is its previous high here from the 17th of Jan. So we run into this level, posting a bit of red today, almost engulfing the body of the previous candle. So that may be worthwhile keeping an eye on. It could be a case of maybe fading into this resistance level that we're seeing on Euro US dollar today. If we look at euro versus some other currencies, euro sterling is quite an interesting one. Sterling a bit weak, as you can see, this really strong move higher that we saw on Thursday. We backed that up with further gains on Friday, taking out this previous high from the 24th, posting a bit of red today as we maybe consolidate some of that move. Overall, this remains bearish. As you can see, we're quite clearly in a downtrend, so any move higher is likely to be only a corrective one, but at the moment looks to be or looks to have some potential to move a little bit higher in the very short term. If we take a look at euro yen, that burst through resistance at 131.60, closing above that level on Friday, although giving a significant amount of that back. It looks like we gapped higher today on the open, but now closed, well, as it stands, moving towards the lows of the session, but a long way to go. Let's see if this support here at 131.60 can hold. Euro New Zealand dollar was quite interesting. That broke through a decent resistance level at 171.63. Quite a decent close above that level. Again, gapped higher today and lower as it stands, down by 0.4%. Actually, probably one of the worst performing of the currencies I've got on my watch list at the moment. So again, need to see if this level at 171.63 can do a job as support. Looking at cable, not really much going on here, still trading in a downtrend. We saw this give up some gains actually on Friday, and it's sort of pretty flat today, really, as things stand. So still expecting lower prices here in line with the downtrend that continues to be in place. If we look at Aussie versus US dollar, that's higher by 0.4% almost today. That's following a fairly chunky sell-off that we saw on Friday following the non-farm payroll number. Overall, still pretty bearish on this. Got some really large top patterns that have formed for me on the longer term charts. So I'm looking for lower prices, and really any opportunity to fade into that, I'd be looking to sell rallies. It's the same situation actually with New Zealand dollar versus the US dollar. That's broken out below a bearish channel. And we've seen now a retest of the underside of that, posting an engulfing candle on the 4th of Feb. Yes, we've got a few gains today, but again, I think it's just maybe another opportunity to sell into the strength that we're seeing there. That's pretty much it, all I wanted to raise on the currency front. So yeah, we'll leave it there. Steve, gone to the head trades from Friday. We had a couple of winners, despite it being non-farm Friday and being quite volatile. We had a win on Aussie US dollar. As I said, I'm a fan of selling that. Made 0.84R on that trade. And Steve, you were quarter of an R on side on Nasdaq. So 2 in a row for your Nasdaq. As you pointed out, could have been a bit better, but you went for the humdinger. And I'd always be in favour of that as opposed for just the sort of smaller wins, because you never know, do you? Could have been
Exactly,
a 7 or 8R winner.
Coulda, woulda, shoulda. Yeah, I agree.
So what do you fancy today?
I'm I still want to fade these indices, but maybe I'm sort of, I don't know. I suppose DAX for me is a bit of one that's looks favourite to move lower compared when I look at sort of like Nasdaq. It seems to be just keep bouncing back. It sort of gets a bit frustrating. So I might look at this and have 100 pip stop in. Oh, where am I going? Where am I going? Where's my stop? This is my stop. That looks nice. And Yeah, why not here? So DAX, looking to set shorts at here. I'll have them stop just above the high from Friday, which is around the close. And yeah, looking to target a swing back towards the lows at 14,855. Remember, 14,810 is a serious level where we've keep bouncing back off. So yeah, 3-to-1 risk reward on this one.
Lovely. I'm going to take a look at euro dollar.
You're going to sell it, aren't you?
Yeah, it's into that resistance level. Look, that's that previous high there from the 14th of Jan. It's rallied into it again on Friday. We're engulfing the previous Friday's candle. So for me, that looks to be a decent opportunity to sell, looking for it to move lower in line with the downtrend. So let's just have a look at the hourly to get a better look at it. Let's clear that. Let's sell it now at 114.26. Stop loss above the high at 114.89, and I'm going to target a move back to the lows.
Nice.
Ambitious, obviously, on an intraday basis, with there being no high impact data out today of note, but you never know. Looking for 4.76. Our target is 111.22.
Coolio.
Let's see how it goes. Okay, so as I mentioned, data wise, not really much going on today to be aware of, but it appears to be a bit of a cautious tone to start the week. So let's see how things progress.
Yeah, absolutely. Okay, mate.
Anything further to add, Steve?
No, all good in the hood.
Lovely. Have a great day then, everybody, and we'll be back tomorrow.
Cheers.
Bye.